So I'm here today and hope to make your time worth. First, I want to thank you for Ziv and email that putting so much effort in this to enable us collectively as a group to share our experience investing in Japan. And I hope we can all help to grow this group even further, have even bigger events next year. So first, I'd like to ask everybody a question. What do you think are most important elements to make a successful investment? Anyone? Any guesses? What's that? Sorry. Risk management, yeah, that's a good one. What other guesses? Or what's the other? Due diligence, yes. Very good, yeah. Any other guesses? Yields, yeah, we're all looking for good yields. Yeah, those are all good elements. So for me, what I think, there's several pathways to get to successful, especially for long-term hold investment properties. Number one, you have to be able to do your due diligence, know your risk tolerance, and source the deal. You gotta be able to find the deal so you can invest. And secondly, you have to, once you find the deal, you need to be able to find the money to finance the deal, because that is really your friend when it comes to real estate investing. Who's here likes debt? Okay, I'm glad to see the hands. Yeah, so I don't know if everybody read Rich Dad and Poor Dad. One takeaway we all learned from his book is really good debt will make you rich. What is good debt? Real estate, yes. How do you define what is a good debt? Anybody, any guesses? What's a good debt? What's a bad debt? Is debt on your credit card good or bad? Bad. Is debt on real estate good or bad? Depends, yes, I like the answer, yes. So any debt that can help you put money into your pocket is a good debt. Those are ones help you generate more income and help you buy the properties. So third one for a successful long-term hold investment is property management. You really have to have a good property managers to help you run the properties, so it can keep generating more income for you. So today, I'm only going to be focused on the second one, which is finding the money. How do we find the money? So I have been a real estate investor for many years, and I have a special toolbox to help me. Number one, the tool is I'm a real estate attorney. Being working on many merger and acquisition deals, I know how to structure deals creatively. Number two, I'm also a real estate agent. So I get to network with different agents. I can learn a lot of off-market deals before it even hit the market. Number three, I'm also a licensed lender. I know a lot of different loan products. So I know different loans that people never even heard of. That's how I, as a foreigner with no Japanese income and only a tourist visa, managed to buy several apartment buildings in Tokyo with leverage. So today, I'm going to unpack all the details for you. All right. So before I jump into the next slides, I wanted to kind of walk through my investment thesis, why to pick Tokyo, and why I like multifamily in Tokyo as investment class. I think Dave talked about different investment assets type earlier, right? There's a single family, multifamily, commercial properties, offices. All those different assets has these different attributes. It really depends on your risk tolerance and your goal of investment. You can choose all the different asset class as you understand your investment goal better. So I want to start my presentation with 3 whys. Why do I focus on the major metropolitan areas? And second why is why multifamily, especially within the multifamily, why do I choose the studio type, the 1K type in Japan? And third why is why I like to use corporate entities to leverage as opposed to owning in your own name, personal name. And for anyone who wants the slides, I can always send it to you so you don't have to worry about taking notes or taking pictures. Then you can focus on just ask me any questions as we go, and just feel free to stop me anytime. All right. Did I go to the next? Okay, so number one, why do I like metropolitan areas? Like we discussed earlier, I really like to use leverage, good debt, to acquire more properties so it can scale up quickly. The number one reason for me to choose metropolitan area is that it's very easy to get financing. Because big banks, they really like highly value properties that located within the big metropolitan areas. That's why I like to buy, this is reason number one, that I like properties located within the big stations, preferably terminal station, but it has gotten more expensive nowadays. So my selection criteria is usually a station with more than 20,000 daily users. Number two, because it's a big metropolitan area, so it tends to have very stable rent. And you will see later, I'll give you the chart that's produced by JLL, the leading international real estate brokerage. They have a chart of comparing all the major cities in the world and compare the different vacancies and the potential for rent growth. Yeah, so let's go to the next page. So here's data from JLL. They publish those data every quarter. I really like to look at data. Those are the help guideline for me to make investment decisions. So if you look at Tokyo, located second on the bottom, it has second lowest vacancy rate, following by Seoul. So Seoul, the vacancy rate is 1%. And for Tokyo, the second lowest, which is 3.5%. And also, I like to use this as a guideline. So one of the factors we also like to look at is the net absorptions, which meaning how fast the place can be rented for, which meaning if the number, the higher is better. So if you look at Tokyo, it actually has the highest number, which is 3.5, meaning it's a high demand in Tokyo area, and it's very likely to have an increased rent because of competition. All right, so who's here like to copy other people's homework? I do too. So I copied homework of all the mega institutional investors. Those are the list of notable transactions that have been done in the past, back in 2022 and 2023. We don't have the 2024 data yet. But if you look at all the major mega deals down in multi-family sections, a majority of them are in Tokyo area. That confirms my thesis that I really like big metropolitan areas. Those areas tend to be more liquid. If you want to sell for any reason at all, it's easier to find a buyer. So people have different investment choices. Some people like to do Airbnb in rural area. Those ones tend to have higher yield for sure, but I'm not so sure about the liquidity. If you want to sell for the next buyer, you may run into a problem. For metropolitan area like Tokyo, although the yield is not as high, but if you want to sell, you can probably find the next buyer pretty easily because it's such a desirable place. Okay, so my next why, I like to explain why I like the single occupancy studio type. It's 1K within the multifamily asset class. So number one, Tokyo is such a hub for young students, professionals, and also foreign workers. We all hear about population declining in Japan, but the foreign populations in Tokyo area has been increasing exponentially. And secondly, young people, nowadays tend to stay in single longer than before. So they tend to occupy those 1K studio even longer. So you reduce your turnover rate, which can also increase your yield. And third, it's resilient for economic shift. So in the economic downturn, people tend to want to keep their expenses low, and they prefer 1K studio because it's lower rent. And next, within all the multifamily single occupancy studio tend to have a higher rent per square footage than the bigger units, than the 1 LDK, 2 LDKs. You can tend to get better rent. Okay, my third why do we want to use corporate entity and put a leverage on it? Number one, we can diversify our opportunities. So if you have $100, rather than using it buy all cash in one property, you'd rather split into $33 each to buy 3 properties, right? So when the price goes up, then you have 10%, let's say the price goes up 10%, then you have 10% gain on 3 different property rather than just having one property. That's why I like to use leverage to help me magnify my gain. Secondly, it's inflation hedge. As the property price value tend to increase and also rent, but my monthly payment of mortgage never change, usually. For Japan, it hasn't budged as much. So it's good inflation hedge. I know my property value and my rent is going to increase, but my payments stay the same amount every month. So that has potential to increase my yield even further over time. Third, why do I want to use corporate entities? Because once you establish the relationship with the bank, they see all your balance sheet, your income statement, they learn about you, they will continue to lend you more. Once you establish a relationship, they like you. And lastly, there's a tax advantage. If you buy in your individual name, when you sell the property, if you have a capital gain, the local agent are required to make a withholding of 20% before they send you the money. But if you use a Japanese, if you set up the corporate entity, use a local entity, and if you ever sell the property, the local agent is not required to withhold all the not required to withhold the 20% proceed to you. So we just disperse the whole amount to your local Japanese entity. All right, so what's the secret recipe to get this non-resident loan as a foreign citizen, has no income, no relation to Japan? First, number one, we need a 40% down payment. That's a requirement that the bank will not budge. Second, the gross rent of your property income needs to be exceeding the debt service, meaning the loan payment, by 1.2 or 1.3 or 1.5 times. And third, there's for individual, when you set up the corporations, they tend to ask the documents to see how much you're making. Although it's not required, but typically they like to see you have income of a Japanese yen 15 million equivalent, or you have a liquid assets of 100 million yen equivalent. And there's no citizen requirement. If you want to learn more about this, you can ask me later. And third, we need a local representative to be able to communicate and sign the documents for you on your behalf with the local banks. That's the basic requirements for getting this non-resident loan. Okay, I'm going to run 2 case studies here. One is for wooden structure apartment buildings, and the other one's for steel frame structure building. So for the first buildings, this building is located in Ishikawa-cho, which is close to Yokohama side. It's a quick commute to central Tokyo, about 30 minutes or so. The floor plans, they have 2 floors. Each unit has 3 floors. The purchase, oh, sorry, I had the wrong number here. So the purchase here, you will see in the next page, I have this detailed pro forma. Whenever any investors buy property through me, I'll do this detailed pro forma for the client. So you don't have to worry about this if you don't like any numbers. Basically, the purchase price in US dollars is about 600K. And after adding on the initial closing cost and the down payment, it adds up to 280K initial investment to acquire this property. So roughly around 46%. And the loan term is about 25 years because it's a wooden structure. The lifetime considered to be shorter than the steel frame structure. So you only get a loan term for 25 years. The interest rate on this is 2%. And then this is after purchase. It will help you run this operating expenses scenario assumptions. Oh, step back. Oh, okay, step back. All right. So basically, the operating expenses add up all the assumptions, vacancies, advertisement, repairs, management fees, reserve for CapEx, property tax, internet, which as a landlord today in Tokyo, we tend to provide free internet service to all the tenants. That's like a requirement today. And we don't really charge any initial down payment to the tenant either. It's called a zero buken in Tokyo. So typically, the operating expenses run about 20% of your gross rent. And then you know, after all, deducting all the debt service, operating expenses, you get your before tax cash flow. It's usually around 3.8%. And then also help you run the exit scenario where let's assume a 5-year exit. Let's say you sell it, you bought it for 600K, and based on what Ziv just said, we assume like 3% each year increase in value. At the end of year 5, we get 15% increase in value. And we bought it 600K, we sell it 700K. Then how much do we get for the internal rate of return annually? It's about 8.7%. But if you believe that yen continue to strengthen, if you add the currency play onto your yield calculation, you're probably going to get even more, which is more than 10%. It's a hard calculation because if you assume the Japanese yen is going to go up, all your rent you received is in Japanese yen, and that also you convert it back to dollar. If it's around $1 to 110 Japanese yen, then your yield will be even more higher. So it's a complicated calculation. I'm here just to illustrate. Without counting any currency gains, probably 8.7%. With counting currency gains, probably more than 10%. Okay, this is case study number 2. It's a steel-framed structure. This is one of the bigger sized building, which consists 12 units. It has 3 floors. Each floor has 4 units. So the gross yield on this one is a little bit lower because steel-framed tend to cost more to build. But in terms of rent, you don't get to charge more than the wooden structures. So if you're a person emphasizing cash flow, then wooden structure building is your friend. If you consider, I want to have potential more capital gain, then typically steel framed is better because it holds longer. So similarly, I run the simulations. The closing cost on this one is about 5.6% of the purchase price. Because it's bigger, so the percentage-wise is a little bit lower than the previous wooden structure. Also, operating expenses tend to be a little bit lower too, because the size of the building. Once you have scale, you have 20 units or 30 units, the operating expenses could be even lower. All right, so here's a key factor we always like to look at before we recommend a particular investment properties. Number 1, is this area going to be redeveloped? Redevelopment means there's a lot of new constructions around the station. Take, for example, could it be new shopping malls or new tower mansion or new infrastructures coming into the area. If that's the case, then it's mostly likely this area going to attract more new residents coming in. It has better potential for capital appreciation. Secondly, does this place have a strong demand for housing? I.e., is there any big employers nearby or maybe big universities nearby? So you know you have a stable demand. Also, we like to look at the balance of the rent versus the cost of acquisition. Namely, if you're within the Yamanote line, usually you won't even get any positive cash flow if you're lucky for new build. So the trick is to pick some area that's not too far from the center circle Yamanote line. Still, the land is cheap enough, your acquisition cost is cheap enough, but you still get a good rent because of proximity of the location to the center. Typically, we only select properties with 10 minutes from the station that has more than 20,000 daily users. But with exceptions, if it's a terminal station like Shinagawa, or one of the stations has more than 100,000 daily users, we'll go out to 15 minutes walking distance. Okay, so last one. How can we help you as investors? We're a one-stop shop. By helping you, we can select the off-market deals. It's usually a new build. Before the as soon as the developer gets the land, we know they're going to build a building there. We'll start circulating the information in our investor circles. Secondly, we can help you get approved by the bank for a loan. And you can always back out. We always put loan contingencies in the contract. If you don't get the loan, you don't have to pay anything. We'll back out the contract. Third, we also provide excellent property management. All right, I think that's all. Any questions?
Okay, I'll just come down. Oh,
Okay.
Can I just come out with the microphone? I haven't seen any messages from this, questions from the stream. So if any players at home are wanting to ask a question, speak now.
So my question is around obtaining a loan around corporate entities. So a lot of people, if they're coming from a foreign country and they're spinning up a new corporate entity here in Japan, they don't have any financial history here. So what are the financial institutions' attitudes towards foreign entities or, foreign tax returns, and basically, attesting that there's some capital elsewhere, but not necessarily here in this country? What's their attitude around that?
Yeah, so it really depends on the banks. The banks that we work with, they have special loans, really just targeting non-resident. For me, myself, I got several loans already. I don't have any connection to Japan, no Japanese income, no assets here. Although I'm 100% owner of the new corporation, they still just review my U.S. tax returns and be able to approve me for a loan. So it really depends on the bank. And depends on the person that you have a relationship with. Some bankers, even though the bank is strict, but if you have the relationship, they probably will make exceptions, review you on a case-by-case basis.
What about for renovation loans? Do you know? Can you answer anything to a renovation loan?
It really depends on the properties.
Right.
If the property is really highly valued at a major station, they might be able to consider, yeah. It's really case-by-case basis. They have to review the property first. They will always want to say it's, let's say, within Tokyo or Yokohama area, it's a really higher desirable area, it's worth something, then they can start underwrite. Okay.
I really loved your credential.
Uh-huh.
All right. I love your credential.
thank
Is
you.
it based in Japan or in the States?
And the US.
And you're able to do it here, practices here with a credential.
So I partner with all local brokers.
Oh, I see.
Yeah.
And you need a local representative, all right? So you will arrange for all that as well?
Yes, we'll be arranging all the paperwork with the local brokers as well.
Okay, the other question is that one of your properties, you say you flip it for 100K.
Oh, we did not, sorry. It was a scenario, like we do this pro forma simulation to give you an idea if after 5 years you sell for 700K, how much is your IRR is going to be like?
Okay, all right.
Yeah, so as an investor, we always run scenario before we get into any, especially for commercial real estate, right? You do the simulation so I know what my gain is going to be and compare with others. Is this worth investment or not? Make informed decisions.
All right, thank you.
So I know that you said that you were a real estate agent. So as a person that's trying to become a real estate agent here, where does my Japanese level need to be at? And like, I know it's extremely hard for to get your license as a real estate agent. So where do you like have any recommendations for like schooling that we can go to like take some courses for it?
Yeah, so I should clarify, I'm an agent in the US, not agent here. But I plan to acquire my license too. Actually, I can introduce you to a course I already bought with my friend. We're going to share the cost of the course, and I'll be sitting for the exam. So a little bit special about me is I went to high school and college here, so my Japanese is fluent. I just went to a school with all Japanese people, so I think you probably have to be pretty fluent, be able to read all the kanjis, at least in one, to be able to sit for the exam.
As long as one person, if you're in a company, as long as I believe that one person has the real estate license, and sorry, 1 out of 5 needs to have the license, and everyone in the office can operate. So there just needs to be one licensed real estate agent on record, and they're the only ones who need to pass the exam. So, but gambaru.
一緒に頑張る。we'll do it together.
Yes, you just mentioned you invest on the 1K apartment. 1K apartment. And typically, how old the apartment?
So all the investment I invested in is 100% new build. So as of long distance investing, I always like to have a new build. So it's no headache, no repair at all. Although I still reserve for them, for the expenses, it goes down to my spreadsheet. But in the first 5 years, typically, you don't really spend on anything repair or capex.
Do you sell like in 5 years, or do you keep it really long time?
That's a very good question. So I tend to have a view of holding long term because I really like a good debt. So if I can get the investment, the loans at 2%, right? Mostly, almost half of it is going to be my principals. So it's a really good asset to keep. And also I have the option to sell if the price doubled in 5 years. For sure, I'll be selling. So I keep my options open. That's a very good question. It depends on market. If 5 years later.
I've got a couple of questions from the stream. Hello to everyone playing at home. You are very welcome here. What kind of fee structure can the speaker that the speaker can share? What's the fee structure?
So we don't charge anything additional, and it's just 3% of the purchase price to the local agent, and I'll be splitting with the local agent. So there's no additional fees on top of that.
Another question from the stream. When you buy investment properties using a company, do you first need to buy cash some properties to obtain a few years of good balance sheets before you can borrow from the bank? How many times of annual profit or income can the bank lend? What's the down? I think you answered that question in the slides. Like, what is the down payment, and which banks offer investment loans? So there's a lot to unpack there.
Oh yeah. So to answer the question, no, you don't need any income or whatsoever to, even as a fresh start corporations starting at day one, you can still use this corporation to go apply for a loan. They really just look at the underlying shareholder like me. What's this person who is going to be running the company? Does this person have credentials? Does this person have some assets that can pay the loan? And most likely they really look at the property itself. Is this property at a good location, desirable? Can it generate enough cash flow to pay the loan every month?
Another question from the stream. How about bank loans for foreigners married to Japanese nationals? I'm guessing that if you don't have the Japanese touch points, how likely is it to get the loan? Does it matter if your spouse is also Japanese or not?
No, it doesn't matter.
Right.
Like I just mentioned, it really depends on the assets itself. So they basically just lend on the assets. You have 40% down. For bank, it's pretty safe investment.
And then a couple of people are just asking for your contact details. I don't know if you've got that on the next slide.
Oh, no, I don't yet.
But
I can
we have that on the information on the website and the ticketing. And was there any more questions from the floor? Oh, there we go. Any more after this? Because then we're going to have lunch, but also another speaker.
You mentioned in the pro forma you're simulating for 5 years. I
Right.
wonder if there's any considerations or reason why you picked 5 years, and also is there any tax implications as a corporate entity if you sell less than 5 years?
Yeah, so a very good question. I'll answer the second question first. So for 5 years, typically we do is in the U.S. just kind of a rule of thumb. If you do any simulation pro forma, you usually use 5 years as a timeline. It's just kind of customized. And also for the 5-year holding period, if you hold the assets as individual, if you sell within 5 years, you'll be assessed additional tax. But if you buy with corporation, and there's no additional tax assessed, even if you sell within 5 years. So that's another advantage of using corporate entities. You can sell whenever you want. It doesn't get assessed additional tax.